Okay, okay. What's up, guys? Welcome to the stream. Um, this will actually be our first live stream today that we will be having. So, quickly, we're talking about some basic fundamentals, technical analysis, and just a very, very nice overview of the market. So we can actually understand some things, maybe pick some trades also along the way. So you are very, very much welcome to the live session, our very first live session with King Mozart. So okay, so quickly let's go through our charts. Let's quickly take a very, very big dive into our chart. There is no news for today actually, so if you guys are very surprised, no news today. So and the market has been quite busy. Gold has been selling since last week. Very, very big sell. So, and I can't actually give you a specific reason or fundamental reason to back the sell of gold. But currently, we are currently in New York session, right? The New York session just started an hour ago. Due to network issues from Nigeria here, we've been having a lot of network issues. So that's why I didn't start the live way earlier than expected. If not, I would have started right around 1 o'clock. So, but all good, we are here. Let's quickly look at some things, what we're expecting from gold. For me, I still expect some sales from gold because maybe we can see a very huge correction from the higher time frame. Maybe potentially, maybe we'll be looking out for this low, right? Maybe taking out this low, hitting a 4-hour order block or something that can actually give us confluence of feeling comfortable to become bullish, kind of. If not, we'll be more focused on being bearish in the market. So if I should highlight this out, this is a very, very potential zone I can be looking out for, or this zone, right, where I'll be looking out for price to come back, sweep these lows, then tap into a 4-hour bullish order block. Then I'll be able to like pick maybe a buy setup or something. So apart from that, let's look at USD JPY. Okay, so let me just teach you guys top to bottom analysis, if I should put it that way, top to bottom analysis. Whenever I come to my chart, I always try to look out for highs and lows, current trend, then the overall trend, because current trend, the overall trend of gold currently, it's been bullish. So I think according to analysis, gold has gone up 60% from its current price started from. So it has made over 60%. Where it started from at January 1st, it has made over 60%. So if we should look at that, gold is currently in a bullish run overall, but at the moment, from last week, we've been in a bearish trend. So that bearish trend will actually, it's, how will I put it, it's giving us a sense that, okay, for a short time we can look for potential sales, and for a long period of time we can actually still have it in our minds that we are supposed to be bullish in the market. So for USD JPY, I told you guys from July to around October, we were just ranging in the market. Prior before that time, from April to also July, we were also in one confined range. So in that confined range, we spent a quarter in a range, we spent another quarter in another range. So now we are in the last quarter of the year. That's why you see these blue lines here, apart from my 4-hour blue lines that I have. These ones are actually the ones that actually mark the quarters for me. Like, these are my how do I call it, my quarterly space. So I count from 3 months. That's January, February, March, that's one quarter. April, May, June, that's another quarter. July, August, September, that's another quarter. October, November, December, that's the last quarter. So currently we are in the last quarter of the year. And if we can look at USDJPY, very much a friendly environment to be looking for sales, because overall from the beginning of this year we've been very much bearish, and I don't know how far we will go, but all this consolidation after we had this bearish run, and also from this top here we had this bearish run, we had a retracement, we had it back down again, then we are now having price rally up. So if I should put it at the moment we are currently in a bullish market, but overall we are in a bearish market. So on my 4 hours, what I currently see a range where I can work with. So the range I have is point A, let me increase this a bit. So this is point A. Okay, this is point A, this is point B, it's not locking in. Okay, this is point A, then also this is point B, right? So I have these 2 points to work with. Which is a range I can work with. Now price hasn't gone out of this range, so if price goes out of this range, then I can now be looking forward to maybe picking a buy, picking a sell, or maybe looking at the market and feeling okay. At this point, if we are breaking out of this high, what are the characteristics I want to see in the market? Is the market giving me an opportunity to be bullish? Is the market giving me an opportunity to be bearish? So it depends on the candlesticks that form at that high. So that's one. Then two, in this range, when we got close to point A, we reversed. So we didn't break outside of the range. Then we had a market structure shift. So a market structure shift is when you have, let me put it this way, when you have a high, right? A market structure shift is when price is moving all the way to the to being bullish. If the market is bullish or we're having a bullish run, then we have price break a low, then retrace back here, then we now have, this is what we call a market structure shift. This low here, breaking this low, is the market structure shift that we are intending to see in the market. So having something like this shifts my my buyers from being bullish to being bearish. So let me now show you a live example, and it's happening on USD/JPY. So you can see from a short period of time, that's from last week, we've been bullish. So prior before that time, we haven't attacked any lows at all. But getting towards Monday, which was yesterday, right, we saw this low that was created on Friday. Monday has swept it. So it shifts my attention to, okay, am I now a potential seller? Should I look for shorts in the market? Now it's now all depends on what happens after the break of this low. So we've now broken this low, which is a confirmed market structure shift. So what I should now be looking out for is marking out key levels. If I should put it this way, marking out support zones, resistance zones, where I want to see the market turn, or where the market has been to and actually turned before. So if I should mark it out, this area is a very, very good zone, right? But for me, I won't want to see price get all the way back to this level. I won't want to see price get all the way back to this zone. So going back to this zone means we want to break that high. So breaking that high means something else. It could be maybe taking out liquidity, sweeping a high, then reversing. So I have to watch and see. But currently, with what we have, if I should look at any other point and I go to my 15 minutes, right, I'm not seeing anything on the 1 hour, on the 4 hour, because on the 1 hour, if I go to my 1 hour, right, you can actually see that we had a market structure shift. The only thing I can mark out now from this 1 hour is this this bearish order block, which is a very potential zone where I want to see markets turn around. So I mark the high and the low of that candle, because that was the last bullish candle that formed before we had the market structure shift. So the way it works is, when you see a market structure shift, right, or you see a continuation of a trend, as price keeps going up, what we intend to do is, when price sweeps a high or attacks a high, we want to see price drop into like make an equilibrium. That's when you're using your Fibonacci retracement. You want to see a 50% retracement. In that 50% retracement, there could be a fair value gap, there could be a support zone, there could be a bullish order block. So that level is where we are now looking out for to pick a buy to continue the trend. So for example, let me put it this way. On USD/JPY, we kept making higher highs, right? We had this high. After sweeping this high, which we broke this high, we retraced back down. You can see that right here, after sweeping that high, we came back down, tapped that zone, which, if you want to put it, this is a demand zone, right? The price has broken. This is also a bullish order block. The price has broken. You can pick your trade from there, then look out for price to keep going higher. In other examples too, let me look out for something else soon. So also here, this high, after breaking this high, then we had price go all the way up. You can see that price came back to this region, 1, 2, 3, had even 3 bounces before we started seeing price going higher again. So most of the times when you see all this, it's just basic stuff you need to know about the forex market and be able to open your eyes to potential trades that you can now fabricate a story around it. So for every trade you want to pick, there must be a story. Even a losing trade, for every losing trade there must be a story or a reason why you are in that trade. if you are not knowing the reason why you are picking a trade, then I don't know what you are doing in the forex market actually. So you are just basically guessing, or will I put it this way, you are trying to play heads and how do they call it, you are trying to make a coin flip around. So it's more like you are saying you are gambling. So but that is not our intention here. So our intention is to make you know that there are ways you can approach the market in which you have a better view of the market and a better sense to trading. So from that 1 hour, okay, from that 1 hour bearish order block zone, right, 1 hour bearish order block zone, we can actually see that on the 15 minutes it marks up well on the 15 minutes, and we can see that price came to that zone, that region, and turned back. Now we can now see price approaching that same region. So if we go to our 15 minutes, we can now anticipate price to take out this high, since we are very, very close to that high. And if I on my forex market session, we're in New York session currently, that high was formed in London session. So I can mark out that high, mark it out as London sessions high, then also mark out London sessions low, since we are potentially looking for a sell on USD/JPY. Then we can now watch we can watch out for the trade. We have a little bit of, we have a fair value gap here on the 5 minutes, the 5 minutes fair value gap. So to explain for those of you that are new to Forex, to also explain to you guys, the way fair value gap works is when you see price, for example, let me open a new USD/JPY chart so you guys can understand what I'm saying. Okay, we had one here. Okay, so anytime you see a candlestick, you see a candlestick just go down, like most of the times you always see those big spikes that news always used to create. You just see a candlestick going up, most especially on gold. You just see a candlestick going up, or you just see a candlestick going down. Now once that candlestick is going down, price was not balanced in that space, so it created a gap or a fair value gap. So we anticipate that price should come back to that zone to balance the equation. Let me put it this way: prior before that dip or the spike up, prior before then, we had buyers and sellers. So for example, right here, we had people that were buying, people that were selling, people that were buying, people that were selling, people that were buying. Now, normally, this is the way price is supposed to move. Price is supposed to move in beats. That's, if it is going high, we are supposed to see equilibrium happen in the market. If you guys don't know what equilibrium is, equilibrium just simply means balance, a state in which opposing forces or influence are balanced. So in the market, we have buyers and sellers. So when I'm saying equilibrium, I'm talking about bringing balance to price. So price should not just keep going up, because if price keep going up, then everybody will just keep buying. There has to be people that are buying and there are people that are selling, because the people that are buying it from people that were actually selling off their own positions. That's why most of the times, if you are closing a trade on your MetaTrader 5 or 4, let's say you have about 4 positions opened in the market, when you click sell, for example, and you close your positions, immediately you close your positions, you will notice sometimes there will be a flash, or like as if maybe a new order is being placed in your MetaTrader 5 or 4. I don't know if you guys have experienced it before, but when you place a buy and you want to close it, something like a sell will show up. It means as you were closing your position, somebody was selling off from you, which you were buying. Like there was somebody selling what you already bought. I don't know if you understand my point. Okay, so that's just meaning of equilibrium. So when we have price going that way, then we can now check our fair value gap, which is here. So the meaning of fair value gap is when we have one side of the market being offered to traders. So in this case, we had one side of the market being offered to sellers, and it was not offered to the buyers. So the people that had their positions up here, in an ideology, and to bring an ideology to it, they are currently trapped. So as they are currently trapped, they have to find a way around it. So when price comes back, it's either they are offsetting their orders, or maybe they were edging from way down, that's buying it back again, or as price was selling, they were buying it, or they were selling to edge their positions. However, that's a business for a market maker. It's not my business. My business is to explain the fair value gap theory to you guys. So this is a fair value gap. It's where you have 3 bodies of candles. A fair value gap must consist of 3 candles. One, which is the candle before the candle that creates the fair value gap. 2, the candle in the middle that creates the fair value gap. Then 3, the one that now identifies that this is a fair value gap. Because most of the times, for example, let's say price is going up, this candle now has traded into this candle, so we cannot say there is a fair value gap there again. It is when this candle, for example, as this candle opened up, it didn't trade into this candle, so we have a potential fair value gap. So going back to our current chart, right? Okay, if we've gotten a 5-minute close, we don't have any news. So no, these days the news spikes that has been happening, we can't give any critical fundamental ideology to it sometimes. So, and also we are currently with a 4-hour candle just closed, right? A new 4-hour candle has started now, so we can look out for a very, very good potential move. Okay, so I'm waiting for this next 15-minute candle to close. It will actually give me a direction of where I want to see USD/JPY head to, and if I'll be picking a buy or a sell also. And funny enough is I currently head of a prop firm named Naira Trader. It's actually a Nigerian-based prop firm. Let me quickly check it out so you guys can see it. So they said they offer 20% maximum drawdown, no daily drawdown at all, and the account starts from 9,500 all the way up to all the way up to 69,000 naira, and they've claimed they've had fast payouts, blah blah blah, and the rest. So their rules is they trade news. Let me check. So they said scalping up to 3 minutes 59 seconds is considered 3 minutes. So we recommend you hold your trade up to 4 minutes. Our broker automatically deletes inactive accounts after 7 days of no trading, which their broker is Xness. They use Xness. So new trailing limits. Your minimum trailing drawdown is 20%. So they have a trailing drawdown. As your balance grows, the drawdown automatically moves up, protects your profits. Okay. Limit trails new high. Account hits trails limit and is closed. The drawdown adjusts upward with profit, but never moves down when your balance decreases. Wow, that's crazy. Trailing drawdown is a very crazy one. I will not advise anybody to go for this, though. It's not really a good thing to go for. I won't advise you to go for it, because trailing drawdown can wound you. Like, it will wound you. Even though they said they've removed 95% of every other thing, it's not worth it for me. I will tell you guys, it's not worth it actually. Because if let's just say, for example, you make you have a 500k account, for example, and you make 550, it means your 20% drawdown has moved from 100k, it has now moved to 50k, which is 450. So before it was 400, but now it's 450. So which means, let's just say you have a bad day, for example, and let's say you've made 580, then you now lose about 50k, or you go down, let's say 100k. You've breached the account, because your drawdown moves as your balance, as your equity increases. Not even your balance, your equity increases and your drawdown moves. So it's, for me, I will not advise you to go for that. So, but let's watch our USDJPY trade. Let's see what we can pick today. Let's check other pairs. We have about 4 minutes before this 15 minutes candle closes. When it closes, then we look out for a break above the high or the low. So then we can now analyze and pick other pairs. So gold looking very quiet after having a very, very deep run this morning to the downside. Euro JPY, I'm still expecting Euro JPY to sell. I'm very, very much bearish on the JPY pairs. I'm bullish on JPY, so I'm expecting every other pair to be bearish on it. So also you can see also our 15 minutes candle is also forming here. Wow, The dollar came off strong this period, very strong. So whatever topic you guys want me to go across or touch, if you want me to talk about some things in the forex market, you can drop your comments below. If there are peers you want me to analyze for you guys, give you weekly reviews about it, I'm open to giving you my own review. But for me, I trade basically and dollar pairs, not really into other things. Just added Bitcoin of recent because I just wanted to watch Bitcoin from the side. I'm not really trading it that much, just trying to watch the market and use some of my concepts time to time and design or forecast where Bitcoin might potentially get to. Okay, so let's go back to USD JPY. Okay, so now we've had our 15 minutes candle close, right? If we were to use our ORB setup, right? Because we already have two confluences currently working. We have our bearish order block zone, which price has gotten to. We've had a 15-minute candle close after we had a new 4-hour candle open, right? So we can mark the high of this candle. We can mark the high and the low, right? Then we just wait to see where price will actually break out from. Then we can now potentially now pick our trade. So if it is to the upside, then our fair value gap will become an inverse fair value gap to use as a potential buy. Then our bearish order block zone will also be an inverse and bearish order block. So the bearish order block zone will serve as a bullish order block. It's just as simple as saying a support zone becomes a resistance zone becomes a support zone. So it's like marking a resistance, then when price breaks the resistance, we expect the resistance to become a support zone for price to go higher. That is if price is not going to sell in this instance. That's what I'm saying. So also we can keep our eyes on gold though. Gold looks kind of juicy for a buy, but don't know if it is ready for that or not. So just to inform you guys, FOGX Academy will be starting up very, very soon. So, and also we also have a Telegram channel. Link is below this video. We have a Telegram channel. We have social trading. For the past 2 months, we've made over 700%. But for the past 1 week, we've had a very, very big plunge on we suffered some losses. So if you want to connect, that's mirror our trades, because Forex trading is all about profits and losses. So if you want to mirror our trades, pick our trades, you can connect with us on our social trading platform. You can go to Xness and search for FOGX on the copy trading section. That is if you want to link your account to us so that you mirror our trades. And also drop other things like explanation on how you can secure your profits when social trading, when you connect your account to our social trading account, what you have to do, profit split, compounding, and also you can also set a stop loss and take profit on your capital. So you can put $300 and you can decide that, okay, once this amount gets to $200, I should come off this trade, so it will take you out. So you can put it that, okay, if the account has gone down 30%, I should cut it off. So I think that's better if you want to join our social trading. And also we have a Telegram channel too, where I am posting daily updates, daily setups, and reviews on things I'm doing. So you can click the link, join the Telegram channel if you want to. So it's not really a must to join our Telegram channel. So, but I'm just telling it to you that if you join the Telegram channel, these are the things you benefit from. We've not had price close outside, so we're still waiting. Setup looks promising, very, very, very promising, very promising. We've not even had the 5 minutes candle close outside our range. And probably it could be because of the fair value gap here, so we need to look out for that also. So, and it can also serve as an inverse fair value gap. Okay, we're still waiting for the setup. Don't know, market's kind of quiet. Just normal, just the normal range. And kind of just slow. But let's see what the market has. Okay, price is actually very slow, very slow. So you give me some few minutes. I'll be stepping out quite quick. Let's just say there about 15 minutes and I'll be back. But okay, so what will happen is I'm going to the live will be on. The live will be on. Okay, the live will be on, right? But my screen is currently showing my account balance, my chart. So if I get into any trade, you will actually know that I'm in a trade. Oh, okay, we are having a breakout now on USDJPY. We're having a breakout on USDJPY, guys. Just 1 minute, then that's a very nice push. Okay, 30 seconds remaining. Can see the way price is pushing down. 15. So if we are going to be entering now, our stop loss is going to be at this high. Okay. So trade is active. Okay guys, so the trade is currently active, right? Stop loss is going to be right around here, above that high. So our stop loss is going to be around 20 pips. Then we are going to be going for a 1 to 2. Or probably first TP will be at London's low. So we are going to be targeting London's low. London slow is going to be our TP. Stop loss is going to be 20 pips. Okay, so the trade is active, right? Okay, so I'll see you guys in the next 20 minutes, 20 to 30 minutes. It won't take that long actually. I'll just see you guys in the next 15 minutes. Trade is active. If there's any other positions, I will let you guys know, and I will add. You guys will see the positions there. I still have my eyes on gold buy. Currently I have my eyes on gold buy. So wow, finally had that plunge to the downside on GBP. Okay, see you guys in the next 15 minutes. Okay. So I'm back. Took quite a while. Took quite a while, but our trade is going fine actually. Our trade is actually going really fine. So we are already at a 1-to-1 already. We've crossed 20 pips already. So I went to do something really quick. That was why it took that long. So if you are just joining the live, this is Tuesday live with FOGX, with King Mozart on FOGX. So we talk about basic things and Forex, fundamentals, technical. Okay, so on gold, we can see an ORB forming. We'll soon break out of that ORB zone. Just remain about 6 minutes and we're going to be picking a buy. Stop loss is going to be 1,500 ticks. Probably going for a 1 to 2.5, something like that. We just need price to get all the way down to London's low, then we'll be closing. That would be an ideal target for us. So now we can secure our stop loss. So we can move stop loss to break even. So at this point, we are not risking anything off of this trade. This trade is a risk-free trade. I forgot my mic wasn't on. I forgot that it wasn't on. So the whole time I was just talking and I wasn't saying anything out loud. Today's kind of a good day. So we are having a very, very good, very, very spectacular price action in the market. Now I told you guys this 5 minutes fair value gap will serve as an inverse fair value gap. Ooh, that's a nice push, fam. Let's see if we get our TP hit. Oh, price is actually plunging to the downside. So we are 26 pips in profit. On our account here, we have a TP of 1 to 2.5. no, 1 to 3 actually. This is a 1 to 3. So we're actually targeting 60 pips actually. So, and if price keeps doing well, we might just keep moving. I just keep locking profits. So as we're locking profit, we'll keep moving our stop loss. So we may even remove our stop loss, then decide to use we remove our TP, then decide to use our stop loss as our take profit. So as price keeps dropping, we'll just keep locking it. So we'll keep locking our profits. So if you guys don't know, FOGX Academy will be starting up very, very soon. Our academy will be starting by November. So, and also You can join our Telegram channel if you want to get set up updates about Forex. And if you want to get more inquiries about the academy, just follow us on all social handles. I think on the link below you can reach us on Instagram at FOGX Resources, Twitter at FOGX Resources, also on TikTok, FOGX Resources also. Oh, gold is already breaking out, and we missed it. Okay, let's just wait for 3 minutes. Let's see this candle. Then wait for the next candle. Then probably the next candle will retrace back down. So we get something like this. So, and already we can see lower time frame PDRA or lower time frame confluence already fulfilling, like this 5 minutes fair value gap. So we have this already. So we can see the market already respecting this and already disrespecting all the bearish order block zones. So we can probably be targeting this high as a buy side liquidity. Okay, let's get into gold buy. 57. Wow, here's the card. Beautiful setup. 42 pips already. Stop loss would have been around 10 pips. This is already a 1 to 4 trade already. A very beautiful trade. Oh, we missed it. So you can't have eyes on everything, and you can't pick every setup. So I'll be ending the live in the next 8 minutes. Right, we've been live for over 2 hours. So on our Telegram channel, if you want to join the Telegram channel, link will be below this video. So that when I post any trading updates, setups, and every other necessary thing you need to know about trading, and also to know when we've started our academy, right? So Oh, okay, guys. It's a wrap for today. I'll keep you guys updated on our Telegram group. I'll let you guys know how the trades are going. I hope you had a very, very nice one. Please don't forget to reach out to us on all our social handles at FOGX Resources on YouTube here, Instagram, Telegram. If you want to join our social trading, just check FOGX social trading, so it is also there. Thank you very much, and I would love to see you in the next live stream or in the next video. Peace out.